Hey everyone, thank you for checking out this video. My name is Travis Rose. I'm a full-time day trader and investor, and I'm also the founder of the Master the Market trading educational programs that you can find linked below in the description. I wanted to make this quick video to go over 5 of the big mistakes that new traders make and that often cost them thousands and thousands of dollars. And we're going to talk a little bit about how you can avoid these mistakes and start your trading career off on the right foot. So mistake number 1 is following trade alerts. Many Twitter, Instagram, stock twits, and other social media gurus, or so-called gurus, mislead countless new traders. Do not follow their buy and sell alerts. You will end up losing even if they profit. So you probably see that these gurus post all over social media about how much money they're making from trading, and they're going to post screenshots of their profits. Many of the time, those profits in the first place are completely fake, and they probably photoshopped a lot of them. But even if they are real, that doesn't mean that you can just follow their trades and still have the same result that they do. And the reason for that is because if we go over to Thinkorswim here just for a moment, and let's say that we're looking at this stock here, NSYS. So if you were looking to trade this stock and you were looking more specifically to buy this stock, and let's say, for example, one of the gurus that you follow on Twitter bought the stock at about $5.20 down here on this dip because he saw that there was some support forming in the 480 to $5 range. So if we go ahead and draw that support down here at about 480, and as I mentioned, he bought it, let's say, at about $5.20 after it started to bounce a little bit, and then he alerted to you that he bought the stock, and you decide to follow that alert a few minutes later. A few minutes later, the stock is already up to about $5.70 per share. So if you waited even a minute to buy into that stock, you're going to be chasing way above where he bought into it. And at that point, there's a good chance that he's already selling and locking in his profits. And by then, you're going to be stuck up here at the top. And more than likely, you're going to end up taking a loss on this big drop here. Meanwhile, he's going to be posting on social media that he just locked in, 20 or 30 cents per share in profit, while you're taking a loss on what should have been the exact same trade as him. Okay, so that gives you an idea of how following alerts doesn't work for you. And you have to keep in mind the fact that there has never been a single long-term successful trader that has become successful from only following alerts. At the end of the day, you just need to learn how to trade on your own. And even though that may seem like the harder thing to do, you're going to have a much higher chance of succeeding as a trader if you do that rather than blindly following some guru's alerts on social media. Okay, so mistake number 2 is not having a trading niche. New traders often try to trade too many different types of setups. By doing this, you're quote unquote spreading yourself too thin. We've all heard that term before, and it actually applies very well to the market as well. So, if you're trying to buy the dip of stocks, you're trying to buy breakouts, you're trying to short sell into resistance, you're trying to trade bull flags and bear flags, all these different things, at the end of the day, you're probably spreading yourself too thin and you're probably trying to trade too many different setups. You're going to be much better off by finding a strategy that fits you the best and focusing on that one single strategy. So for example, if you are somebody that prefers to buy the breakout over the high of day with strong relative volume, then focus on just doing that one thing and avoid any trade that doesn't necessarily fall into that strategy. And if you stick around through the rest of the video, we're going to talk about how you can actually find which strategies suit you the best and an easy way for you to focus on just that one strategy. All right, so mistake number 3 now is trading too large. You're going to want to avoid putting your entire account into each trade, even if you are trading with a small account. Now, trust me, as somebody who started off with a small account as well, it can be very tempting to put your entire account into each trade because you, of course, want to grow that account as quickly as possible and you want to get over that pattern day trader rule. So, of course, logically, the quickest way to do that is by going in with larger position sizes and making larger profits by doing so. And that is, of course, true while you are right. But on the other side of the spectrum, large position sizes also mean large losses. And as somebody that is a new trader, you have to really prepare for losses and not only prepare for them, but also expect them. So if you're trading with a majority of your account on each trade, it's really only going to take a few losses to do significant damage to your account size. So just to give you an idea of how important it is to trade with small size and to keep your losses in general small. If you look at this diagram here at the bottom, you can see that if you take a 5% loss on a trade, it's going to take you 5.26% to get back to break even. Now, if you take a 50% loss, it's going to take a 100% gain to get back to break even. So what that means is if you have a $2,000 trading account and you get into some high risk, high reward trade, hoping that you hit a home run and make a big profit, but instead what happens is you take a 50% loss on your trade, your account balance is now going to be at $1,000. And to get back to that same $2,000 that you were just at, you would need to double your account or make a 100% return just to get back to break even. So when it comes to trading or investing, rule number one is always to keep your losses small. And one of the easiest ways to do that while you're just getting started is to simply trade with smaller size. Now, mistake number four is going to be not having a trade plan. You can use some very simple technical analysis and strategy to have a trade plan before you enter the trade itself. Ideally, your trade plan is going to consist of profit potential or reward that is more than your loss potential or your risk. So if I go back over to Thinkorswim here, just to give you an idea of how you can actually form your trade plan, we draw some simple lines of support and resistance. You can see that down here we have some support at about $4.85, and we have some resistance up here at about $5.76. So if I were looking at this stock and waiting for an opportunity to buy it, I would know that I would want to cut my losses quickly below this support level, because when a stock breaks below support, it often goes lower until new support is formed. So I would use this $4.85 area as my risk level, and I would look to cut losses just below that if the stock did break below it. On the other side of the spectrum, I would use this resistance level up here in the 575 area as an opportunity to lock in my profits on my long position. So if the most I was willing to lose on this trade was, say for example, $200, and I knew that I wanted to cut my losses at $4.80 if the stock happened to move against me, and I was planning on buying it at $5 per share, that's going to be a 20 cents per share loss if the trade moves against me, with a maximum risk of $200. I then know, because of my trade plan, that the most amount of shares that I should buy in this case would be 1,000 shares. So I'd be risking $200, and because I know that the nearest resistance is all the way up at $5.75 per share, let's say I wanted to lock in my profits just below that at $5.70 per share, that would be a potential for 70 cents per share or $700 in profit on the overall trade while only risking $200. So that would be a good trade plan if you were watching a stock and you saw something similar to that with a much stronger reward than there is risk. And realistically, I always have some kind of trade plan similar to that before getting into a trade, and I recommend that you do so as well. And that's going to lead us now to mistake number five, which is not tracking your trades. You want to keep data of all of your trades in order to see which strategies are working the best for you, which are costing you money, things you're doing well, and things you can, of course, improve on. So this is really going to go hand in hand with mistake number two, which is, of course, not having a niche in the market. So as I mentioned, you're going to have trading setups that work best for you, and you can have some that maybe don't work the best for you, and you end up taking more losses than you should on. When you're tracking your trades and you're keeping track of all of this data, you're going to see which setups work the best for you, and you can focus solely then on those trades, making that your niche, and that's going to improve your accuracy in the market and improve your overall profitability in your trading as well. And those are the five top mistakes that many new traders make. And just as a quick bonus, mistake number six, many people dive into the market with little to no education. Too many traders are starting off without having any proper education, and really that's a recipe for disaster. And take it from me as somebody who started off on their own as well. And I thought I knew what I was doing when I really had no idea. And it took me years and years of studying and learning on my own, and of course thousands of dollars in losses that I could have very easily avoided if I would have just learned from somebody that is already trading profitably. So my recommendation to you is find some kind of education, take some time and study it before you dive into the market and before you put your hard-earned money at risk. If you're interested in learning from me personally, I have some educational sources below, linked in the description. And if you stick around for the next slide, I'm going to talk about some of those in more detail. So if you enjoyed this video and are ready to learn more, make sure to go to the links in my description to enroll in my day trading courses, starting at only $10.99. Learn more and even enroll in my full mentorship program, where you're going to learn step by step how to become a profitable day trader. You can even view the link to open a funded trading account, where you're going to have the opportunity to trade with an investment firm's money, even if you have no prior market experience. And below, you'll also find my email, which is 10percenttrader@gmail.com. So if you have any questions or concerns about anything in my description or anything discussed within the video, feel free to reach out to me there and I will gladly help you with that. But without further ado, thanks for watching. Make sure to subscribe. Good luck with your trading, and I'll see you in the next video.